Hi, and welcome back to the Life License Qualification Program video series. My name is Jason Watt, and I wanted to take a few minutes right now to discuss some of the practical reasons why people purchase life insurance. We've talked about the ins and outs and the particular details. We've looked at the wall of death. We've looked at the needs analysis for life insurance, and some of those items will help us to understand why people acquire insurance, and certainly we've touched on it all through the various presentations. But I do want to talk a little bit about some of the reasons why people buy life insurance, and I think this will help you as you go through the exam process to see how you should be looking at answering some of the questions, what kinds of things you should be looking for in the questions. So in no particular order, I just want to talk about some of these particular reasons. And the reasons why people will buy life insurance. The first we'll look at is the basic need for protection for a family. This is mom and dad, a couple kids, a mortgage. This is almost exactly what we looked at in the needs analysis section in both the textbook and in the videos. And it's important to be able to do that needs analysis thoroughly. And as discussed in that section, that's where you're going to have to ask the question, what is life going to look like with mom gone? Or what is life going to look like with dad gone? It can be a challenging scenario to work through, but we have to be able to do that. We have to be able to put the right amount of life insurance in place to meet the family's needs. If we're not looking at a family's situation, we might be looking at, say, an older couple, and not that they're not a family, but we're not looking at them, the kids, the mortgage. Maybe you have an older couple, maybe, and not even that old, but somebody in their 50s or 60s, who has a need for insurance. This need for insurance would arise typically for a different set of reasons, though, than our young family. For this couple in their 50s and 60s, they might be starting to think about how they're going to leave something behind for the kids, the grandkids, a favorite charity, whatever it happens to be. And this family might now look at putting insurance in place in order to do things like pay the taxes that will arise upon their death. They might be looking at putting insurance in place in order to be able to facilitate the orderly transition of a family business or family farm. We often accompany that with what's called an estate freeze. An estate freeze is just a means of locking in the value of the estate at its current level and passing on any future growth to a next generation. They might be looking at some charitable giving as part of their overall strategy. They might want to leave behind some sort of an endowment for a charity, something that they can be proud of, and it's often very meaningful for somebody who's spent their lives working hard to leave behind something that will benefit future generations. And we see this more and more today. I believe that we're seeing more and more philanthropic activity amongst the wealthy. It doesn't have to be a wealthy person to leave a meaningful death benefit behind either. This is something you should typically talk to your clients about. Do you have a desire for charitable giving? Life insurance can match very well with a charitable giving strategy. We might be looking at the investment opportunity associated with a life insurance policy. So you might have a scenario where you have clients who are already using their registered retirement savings plans to the maximum. They might use their tax-free savings account as an emergency fund. They're looking for some additional opportunities for some tax-deferred investment or some tax-exempt investment. A life insurance policy can accomplish that, and the life insurance policy has a couple of additional benefits. It's very easy to use a life insurance policy as collateral in order to leverage later on. It can be a great source of retirement income done properly. The life insurance policy also features the benefit of creditor protection if you've named the proper beneficiaries. If you have a cash value accumulating within a policy and you have named your parent, spouse, child, or grandchild as beneficiary, or you've named an irrevocable beneficiary, in those circumstances, if somebody were to sue you, or you have to declare bankruptcy, whichever it happens to be, the money that's sitting in that policy cannot be accessed by your creditors as long as it's been in there for more than a year, or in some cases you have to have 5 full years of investment time in order to achieve that creditor protection. That only arises if there's some doubt as to why you put the money in there. We might also invest We might also use a life insurance policy, in order to meet business needs. So a business will acquire life insurance for a variety of reasons, most often, though, to take care of the business if we have a shareholder die. And what we want to do is we want to allow for the early transition of the business to the other shareholders or to their spouses. In order to achieve that, the business will go out and acquire some life insurance, and through a number of different arrangements, we might have that death benefit from that life insurance policy flow then to other shareholders who would subsequently purchase the shares from the family of the deceased. We might also have a business acquire life insurance to cover off a key employee, somebody who's vital to the business. We use the life insurance in that case to generate a death benefit, to help go hire a new person, or to train somebody internally, or to replace the income that the deceased person was generating for us. We might use life insurance policies as a form of retirement savings within a business. Some businesses will acquire life insurance with cash values associated, universal life or whole life, build up those cash values, and then end up using those cash values to generate a retirement income. This is a very complex strategy and one that you should absolutely get advice from an accountant or a tax lawyer before you implement, but these strategies often take the name of a a supplemental employee retirement plan or a retirement compensation arrangement. So those are just a few of the reasons why people use life insurance. I'm sure that there are others. I know that there are some others that I've missed, and you'll come across others in your employment in this industry, but it's important to think about that. Why is somebody buying insurance? Why do they need insurance? How much insurance do they need? What's the most appropriate product for them? These are the things that you're going to have to recognize for exam purposes and for study purposes thereafter. Thank you very much. I hope that you're comfortable dealing with life insurance. I hope that you feel confident going forward and that you achieve success on the exam and in your career afterwards. Thank you.